Now, what can they do? The Fed, everything depends on Bernanke's promise that when the time comes, he'll absorb all these new funds that he's got. He'll pull them back into the Treasury
at the perfect moment.
Yeah, they're proud.
You know, Lee Hoskins,
that's going to be.
Can I address that? Hang on a second, Peter.
Lee Hoskins agreed with me last night on your show.
No, but Lee Hoskins, former head of the Cleveland Fed, made an interesting point. Put the treasuries aside. The fact that the Fed is going to buy so many mortgage-backed securities and other asset-backed securities adds politics into it. The minute the Fed goes the other way and extinguishes those purchases, then you risk losing support for these key political areas, especially housing. So what Hoskins is saying, Bill Seidman, is politics, the Fed can't create an exit strategy because they're not using ordinary plain vanilla treasuries.
And the problem
therefore, the inflation threat that Schiff is talking about is going to be continuous.
And you know what, Larry, the problem is we're not going to be able to raise rates sufficiently because we're going to have a bigger bubble by then. But what happens right now, what Bernanke has just issued is a giant sell signal to the rest of the world to sell their treasuries to the Fed. Because when the Fed prints money to buy treasuries, they make treasuries less valuable because they destroy the value of the dollars that the treasuries promised to pay.
Why
so
is
there's
it
going to be a
nobody,
stampede.
Why is it that nobody
But you're going to do that anyway, Peter, by issuing a lot of
the
treasuries
prior
to begin with.
administration.
All right.
Neither the Bush administration nor apparently the Obama administration cares about the stability and value of the dollar, Peter Schiff.
Well, they're
Why
going
the
to
heck
care
is
because
that?
this is going to be a
Last word.
currency crisis. That's what's coming.
Yeah, I
and
fear
what
you're
we've
right.
experienced so
And
far is
Peter,
nothing
Peter,
compared to what we're going to go through.
Peter, this is where you have been wrong. You predicted a
Well, no, I
depression
haven't been
on
wrong.
a
Are you
current
telling me I've
account
been
crisis.
wrong?
It never happened. We have not had trouble financing our debt overseas.
Steve,
at all.
you're
The dollar
not going to
has
sit there and tell me that I'm the one that's got this
called a
wrong.
recession, Peter, for the exact wrong reasons.
All right, we
Never
gotta
happened.
go. We gotta go.
Steve, you
Thanks, guys.
really can't be saying that.
I just did.
He did.
Go back and
it's
play the
correct.
tapes of my appearances for the
You're
past
wrong.
few years.
You did not have
Now
the
it's
I've been
on your
wrong.
call.
I've been wrong. What are
crisis.
you kidding me?
You're on for the wrong reason.
No, Steve, you are
Will
you're
the
still
Fed's
so clueless.
$1.2 trillion Can you
We
scroll?
got that through.
You want to scroll up?
We got
Gamble, pay off. Go to CBC.com and answer our poll.
Okay, next caller is Jordan in Michigan.
I have a couple quick questions. I was wondering, how can a gold standard be successful with a growing economy?
I don't understand. I mean, we were on a gold standard during the Industrial Revolution. I mean, the most prosperous period in American history was when we were under a gold standard. In fact, the most prosperous period of British history was when Britain was on a gold standard. I mean, when you adhere to a gold standard, you get prosperity. Sound money breeds prosperity because it encourages savings. People will save money that's going to maintain its value. And savings is the root of economic growth and capital formation. So, I mean, the best part of, the best histories of growth have happened with the sounder money and gold standards. You always have the politicians that are trying to convince us of the opposite because they want paper money. They don't want the discipline of gold standard. The politicians want to be able to do what Ben Bernanke is doing right now. They want to be able to print money.
Well, what would the advantage, because on a gold standard you'd have continuous deflation rather than inflation, right?
Well, under a gold standard, you wouldn't have inflation at all. You'd have solid, sound money, and you would have falling prices. But it only lowers prices if you have sound money. It's ever since the introduction of the Federal Reserve, that's when we turned from a nation with prices constantly falling to prices constantly rising. And when that happens, when prices are rising and things are getting more expensive, then living standards are falling. I mean, that's one of the reasons that now you need two people to work to support a household, when in the past you only needed one.
Wouldn't your money eventually become worth so much that people would have to scale back on wages and stuff? Exactly like...
Oh, no. Even if wages were falling, even if wages fell, prices would be falling even faster, so that real wages would be rising. I mean, what counts is not the level of wages. What counts is wages relative to prices. And even if wages are declining slowly over time, if prices are declining more rapidly, then people are better off. And that, that's what counts. What counts is your standard of living, what you can buy with your money. The nominal amount of money doesn't matter. People are going to find that out pretty soon. As a result of this massive inflation that we're creating, everybody in America is going to be a multimillionaire, but they're all going to be broke. So what good is it going to be? It's not going to matter if minimum wage is $1 million an hour if a loaf of bread is $10 million.
Okay, yeah, I'm all for a gold standard. I was just wondering how it would work. And then I have one question. I was just wondering, what's your opinion, if the government hadn't bailed out AIG, what do you think the true repercussions would have been?
Well, I think it would have been bad. I think AIG would have failed, and it would have set into motion other failures. But, you know, the consequences of bailing them out in the long run are going to be much more severe than letting them collapse. You know, it's always better to take the pain, you know, rather than trying to postpone it with government intervention. It's like, you know, if you got a Band-Aid, you got to pull it off. You know it's going to hurt.
The economic crisis is only just beginning, according to my guest today, Peter Schiff, president of Euro Pacific Capital, one of the first to see it coming. And Peter, there has been a sense of late that the economic data, the deceleration is starting to decline. Some people saying that maybe we're starting to bottom out here in the economy. You say no way.
Not a chance. Not a chance. As I said, this thing is just getting started. Remember, what's imploding is the entire phony American economy, where Americans borrow money and spend it. And what's happened right now is the government is now taking on that mantle. The government is now borrowing and spending because Americans are too broke to do it. But what we're doing is making the problem worse. And when the bubble finally bursts in the bond market, and maybe it already has, judging by what's happened so far this month, quite substantially, if the dollar rolls over, which it should, and begins to fall, ultimately it's going to collapse. That's going to knock the rug out from under everything the government is doing, because when the bond bubble bursts, now the government needs a bailout, the government is broke, and that's when this crisis is really going to go into a whole new gear. Because
we're certainly not there yet, but at this point the government can still borrow for long-term at relatively low rates. Is your prescription that they shouldn't do anything?
No, of course. The last thing we need in this country is more borrowing. We need less borrowing. The government is trying to encourage more consumption when we're in trouble because of all the excess consumption. We actually need the tough medicine that the free market is trying to force upon us. We need Americans to spend less. We need less credit going to consumers to buy cars, to buy houses, to buy appliances. You know, that's what we need. We need people saving money. We need capital freed up for the private sector. We don't need more capital usurped by the public sector.
So, you know, you're maybe one of the few people I've heard who say that the stimulus bill, there are people who say that it's not going to do any good the way it's structured now. You're saying they shouldn't do a stimulus bill, period. Is
exactly. The stimulus is the worst thing they can do. It's actually going to stifle the economy. It's more of a depressant, because all the stimulus is going to do is put us in a deeper hole. We need the exact opposite of that stimulus. We need to really stimulate production and savings, and everything the government is doing is going to suppress that.
Interesting. So we have seen the savings rates start to tick up in this country.
Yes,
so
that's
the
a good
public,
thing.
that's a good thing. You're saying the public is doing it, but the government, they're just continuing to spend and spend more and more, going deeper into
Right,
debt.
and the government is trying to interfere with that process. We need the savings rate to go a lot higher. But of course, if Americans are saving their money, they can't spend it. And it means we're going to have a very severe recession. But that's the price we have to pay for years of reckless borrowing and spending. The government has to fess up, level with the American public, and let them know this is going to be tough. Because if the government continues on this course, they're going to create an inflationary depression that is going to be much worse than anything any of us have ever experienced.
And you think it would be worse than what's going to happen now if we continue along this path?
Yeah,
right?
It's the exact opposite of what President Obama is saying. He's saying that it's going to be terrible unless we act. What I'm saying is, if we don't act, it's still going to be terrible. But if we do act, it's going to be an unmitigated disaster.
So basically what you're saying is we need to totally change the way the structure of this economy is done, because it's built on consumers borrowing and consumers spending.
Well, that's the problem. It's built on a phony foundation. We have to let that foundation collapse so we can replace it with a more viable one. You know, we need to build an economy on underconsumption, on savings, and on production. That's the only viable economy. Just like Bernie Madoff's investment scheme couldn't work because it was a Ponzi scheme. Well, our economy can't work. It's a Ponzi economy. We have to let it collapse so we can replace it with a viable one.
Okay, and you said at the top that maybe the bond bubble has started to burst, and that's the first step in the next cycle downward. What time frame are you looking at to when the scenario you're seeing starts to unfold in a major way?
I think it'll unfold probably before the end of the year, if not in 2010. But when the government's ability to borrow is gone, and when interest rates really start to rise, now we're going to start to experience this crisis in a much higher degree. And of course, when the Fed is now going to be in a box where it has to raise interest rates and raise them aggressively, despite the fact that the economy is weakening, that home prices are falling. But if the Fed refuses to take responsibility and says, you know what, we're going to keep interest rates low no matter how bad inflation is, and if the Federal Reserve starts buying up all the debt that nobody around the world will touch, then
to this point, their balance sheet has expanded dramatically. Yeah.
Then what we're going to have is hyperinflation. When I talk about hyperinflation, I'm not just talking about high inflation, double-digit inflation like we had in the 1970s. I'm talking about something a whole lot worse than that, something that they've experienced in countries like Latin America. That's what's going to be in store for us if the Fed refuses to raise interest rates.
Well, when you talk about hyperinflation, I was thinking of the Weimar Republic in Germany after World War I. People had wheelbarrows full of money to buy a loaf of bread. Is that what you're talking about?
That's what will happen if the government doesn't do the right thing. But of course, doing the right thing is going to mean aggressively raising interest rates, despite the fact that unemployment is getting worse, that the economy is sinking deeper into a recession. They're going to have to do what they're refusing to do now, which is going to be difficult, because if they did the right thing now, it wouldn't be nearly as painful as doing the right thing a year from now or 2 years from now.
You're saying take the tougher medicine now, but a lot of people would say if you do those things now, what is a recession here becomes a depression, that was some of the problems in the 1930s, that the Fed was too restrictive when the economy started to go down.
That's actually the opposite.